Hi everyone, hope you're all doing well. Today I'm going to talk about a brand new stock I've started buying. I started buying the stock last week, I think it was, and normally I wouldn't do that quick of an update on the YouTube channel. Normally I give Patreon members a little bit of a head start about that one, but I thought I'm doing the stocks I'm buying next week, so well, Friday this week and Friday the week after, depending on which one I do, either the UK or the US stocks, and I thought, you know what, I might as well do a video on it today and talk about why I'm buying this brand new stock anyway, so I hope it's all okay for you guys. Just to let you know as well, I did do a review of PayPal earnings yesterday, so if you want to see my full thoughts on PayPal's earnings, a little bit more of a nerdy video, a bit more running the numbers about the upside on PayPal, then the video is out on the Patreon for you guys. I have also, if I'm on the right, yes I am on the right page. I have also launched the memberships on the YouTube channel. So if you just want to support the YouTube channel in general, you want a little cool badge when you comment, and I'll try prioritize your comments as well if you do comment if you are on the membership. And I'm also going to try put a few of the Patreon videos on the YouTube. So if you're not bothered about the Patreon, which is still cheaper than the YouTube memberships, you get more exclusive content, you get the live buy sell alerts on the Patreon, but you go, I'm not bothered about Patreon, I just want to stay on YouTube, then you get some of the exclusive content on there for you guys as well. So I've launched that just to put some of the Patreon content on. You might have seen that the PayPal video has just come on that point of view as well. So yeah, I just thought I'd launch that for the guys that are not worried about getting on the Patreon but want some extra content. It's on there for you guys as well. But very, very quickly before we do get on the stock I'm buying, PayPal, what an interesting move today is. So the stock is down 3% and it's literally given back all of the gains that it had yesterday, and the stock price is basically where it was before the earnings. Incredible, isn't it? Unbelievable. The stock market is crazy, you know. But as I said on the Patreon video, you know, it's frustrating, but these are the best opportunities where the financials are going like this and the stock price gives you exactly the same price to buy it. Even though it's just grown revenue at 7%, net income's just grown 23%, you can buy it as the same price it was yesterday. Incredible. So even though it can be a bit frustrating, it's a in my opinion, a very interesting opportunity. But it's also, as I said yesterday, when the stock did jump 18%, I did take a bit of profit off the table because I just thought, you know what, we've seen it before with PayPal. It gives away some of the earnings sometimes. There might be a few people just desperate to get out. And I thought, you know what, we're here to make money. And I took a bit of profit off the table. And I'm glad I did take that little bit of profit off the table yesterday. And obviously you guys on the Patreon, one of the benefits, you know, you get to see what I'm doing in real time on Patreon, knew that I made that move. And it looks like an absolute genius move right now. And, you know, every so often I have these things thrown out in the comment section going, oh, you're a day trader, you took a bit of profit off the table. And it's like, no, I'm here to make money. That's what I am. I'm a long-term investor. I buy stocks for 2 to 5 years. But if you give me an opportunity where in, you know, an hour, a stock goes up 18% from where it was yesterday, and that stock has got a history of maybe giving a few gains away, or we've seen it before where these stocks give away these unnatural moves, and my job is to make money, I will prioritize making money. And that's what I did. And now obviously the option is that with the jump here in the share price, and now it's gone back down there, if I want the money that I took off the table, I can put back in and obviously lower my average. And as well as that, I also get the option to buy even more shares with the profit I have. So yeah, that's a big thing, you know, sometimes is that, yeah, I think quite often people can get caught up. I mean, no, I'm a long-term investor. I'm holding for 2 years, 3 years, 5 years, 10 years. But you always got to remember the aim of the game is to make money. And if you have the opportunity to make money, that's what you got to do. And yeah, you know, the giveaway in the share price isn't really even bothering me today, because I look and I go, well, I made money on it, so I'm not really bothered. And all I have now is an option to buy more shares at the back at a cheap valuation, so it doesn't affect me. One of the reasons why PayPal might be going down, and another new stock that I've been buying recently, which is Shift4 Payments, that's having a bit of a tough day today, is this company, I think you say it Fiserv, which is, what a shit name. I never say that on the videos, but oh my, like, who sat down and thought, I've got a really, really good name. What we're gonna call it is Fiserv or Pfizer. I think you might say it Pfizer. Like, oh yeah, let's name it exactly the same as another pharma company. Like, what? It's a stupid name. But anyway, down 40% today. You know, this is what I said to you on Monday, is that be prepared, because when you get into earnings season, you do get some absolute mega amounts of moves in here. And I don't own this one, but down 40%. I saw the earnings and they were pretty poor, to be fair. EPS was like a 30% miss. So when the stock was only down like 20% originally, I was like, this could go down more than this. And obviously it's gone down 40% since then. The revenue growth, well, there isn't revenue growth. It's all disappeared, and there was a big downgrade on the guide. So big issues going on there. I know a few people on the Discord are saying that maybe it's an opportunity. I don't know. I don't know the company well enough to give my opinion on it. All I can say to you is that them numbers and that downgrade is massively concerning. So just be a little bit careful. I mean, I don't know on the page room, we might end up covering it on the stock request, but like I said, I don't know if I'd be too interested in it, because obviously I've already got shift 4 payments in this space. But yeah, that's obviously dragging down shift 4 payments, that maybe there's some flow through into shift 4 payments numbers when they report. They report next week on the 6th of November. But ultimately now, shift 4 payments has the get out of jail card, because if they do good numbers, then they get to go, hey, look, we're beating the competition here. And if they do bad numbers, then they just go, oh well, just look at our competition, they did bad numbers as well. So it could be actually used into shift 4 payments favor with the numbers that they've brought out. Anyway, look, so let's go on to the stock that I've been buying anyway. So the stock I've been buying is SharkNinja. We did a stock request on this one last week. This is where members of the Discord vote for me to take a look into a stock. The winner was SharkNinja. I had a look into it and I went, yeah, I like this. I'm gonna buy this. I think this is the best thing about the Discord now, is that I hardly actually really look for stocks myself to go buy. I get, because of the Discord and all the other places, I get like 10 stocks thrown at me every day. And because of that, especially the Discord and the stock request, normally some of the best stocks get voted for. And I have a look, and I get to see if I like it. And it's like a scouting network of stocks. And I think it was Oliver that brought this one forward, and it was a great suggestion, because I looked at it and I thought, you know what? Yeah, I'm going to buy it. I really do like it here. So I did start buying some SharkNinja. So it originally came on the stock market in 2023 through a direct listing rather than an IPO, which is interesting. Stock performed absolutely amazing, went up over about 300% return. And then since about October time last year, the share price has basically stayed stagnant and gone nowhere in the last 12 months. Yet financially, they've actually been performing very well, and I think that could be an opportunity to go buy them. Now, I'm going to do a bit of a brief video today on SharkNinja. If you do want more of the nerdy, gritty videos, obviously go and watch the video on Patreon. The video on Patreon, I think, is I'm going to play. Yeah, it's 31 minutes long. So yeah, the video that I'm going to give today is like 7 minutes long, but a lot more detail on the stock request one. But Ninja, so obviously mostly known for their air fryers, I would say, although they have other products as well, like other cooking products, coffee machines, blenders, kitchenware, and obviously they also own the brand Shark, which are mostly known for their hoovers, but they've been expanding into other categories as well, like beauty. Beauty is a big expansion for them as well, which looks like some of the, let's go on the Facial Pro Glow, which has been a pretty good product for them, as you can see here. So yeah, this could be a great expansion for them. Now, the latest earnings, really good. EPS was a good beat, you can see here, nearly a 20% beat on the EPS. Revenue growing at 16%, with a little beat going on there, and that actually led them, if we go on here, to raise their full year guide. So no issues from a financial point of view, and when I was trying to find out why SharkNinja might be down, a few people said it could be concerns around the numbers, and I was like, well, there doesn't look any concerns at all to the numbers around me, because they've just hiked up the guidance and come in with a triple beat. So no issues from that point of view there. So they are always continuously launching into new categories. One of the big viral products for them this year has been the frozen drink makers, and maybe that's one issue, is that when they do bring out these viral products, that sometimes it can set them up for tough comps. But when the air fryers went absolutely ballistic, which I think was like probably around 2020 time, I would say, the air fryers really caught the hype. You can see here that they've always continued to increase the revenue and profit. So that big headwind they overcome, and this frozen drink makers that's been very popular for them this year, I'm sure they'll be able to overcome them with new products, and obviously the launch into the beauty range seems to be very successful for them. Historically being mostly a US and Canadian business, they did expand into the UK a little bit quicker in 2014, but apart from that they've hardly expanded internationally. You can see here really they only expanded into the rest of Europe, the main sounds a bit harsh, but the bigger countries in Europe, that's the correct way to say it. They did launch into the bigger countries in Europe in the 2020, 21. So that's been a big expansion for them, but they've got all the other areas to go into. So, for example, they've just recently started launching into the likes of Latin America, for example, the likes of Norway, for example, they've launched into recently as well. So I think Poland is a launch this year that they've done. So they're now expanding to the whole international market, which is going to be obviously a great growth driver for them as well. Looking at analysts, one thing that I saw was that the Gemini AI was saying that analysts have been negative on it, and from what I could see, analysts are actually being pretty positive on it. The scan data looks pretty good in the latest month. What we have at the moment is analysts saying, look, we're getting interest rate cuts at the moment because, these products are quite expensive products, which obviously if you're getting at lower interest rates would be good. But also the big thing that happens, or the main driver sometimes of why people would go and buy air fryers, or the reason why they would potentially go buy new Hoovers, for example, is because people go buy new houses. And what we've seen for the last 2 years is basically new home sales in the US have stayed pretty stagnant. And, the US still accounts for a big portion of SharkNinja's revenue. They accounts for around about 63%. It has been going down the last few years as that international expansion has continued, but it still makes up the majority of the revenue at 63%. So what we've seen at the moment is if interest rate cuts are going to come, and we've seen new house sales basically stay flat for the last 2 years as these interest rates have been sky high. Well, we've just had our first interest rate cut in the US, and it looks like there's going to be a few more to come. And you can see already that's seen a bit of a spike up in the new home sales in the latest month in August. And if these interest rate cuts are going to come more and more, maybe we see these new home sales actually start picking up. New home sales start picking up. Who's going to benefit from that? It's going to be someone like SharkNinja, as people go and get their air fryer products, as they go get the maybe the Shark Hoovers, for example. So this should have a really big what's been a bit of a headwind for them very quickly turns into a bit of a tailwind for them, which is great. The company is also expanding profit margins and margins overall. It has, it's a higher end products, these products as well. So when you're selling one of these, when it's a £150 product, £200 product, £250 product, the profit you generally make on these are very high, margins. So for example, you can see for 2025, they're going to make about 6 billion in revenue, but around about 646 million in profit, which obviously is over 10% profit margins, which is lovely. And having 646 million a year on a 13 billion market cap is obviously, really nice. And it gives them the option. They can go pay down some of the debt. They can go do share buybacks, which is a great option for them. I do say the balance sheet could maybe be slightly better at 34% debt to equity, 755 million in debt, but 1 year profitability basically wipes out the debt. So that's an option that they potentially have to do this year, or continue to buy back shares. The only negative I actually found with SharkNinja is basically the ownership structure, where there is a shareholder that owns 43% of the business. They did sell off 10% of the business, and it does look like they're actively maybe looking to potentially reduce their stake at the moment, which could be a little bit of a headwind, because every time, let's say, they want to dump off 10% of their stake in the business every year, obviously that's going to take a lot of buyers to potentially buy that up, and that might be what holds the stock back. That's really my number one concern that I have with the business. So we'll see if that does materialize, and that's just something to be careful of. Looking at the company overall though, great paths of growing the revenue and profit. This year, we're expected to close off at 19 times earnings, which currently right now on a trailing 12 months basis is 28 times earnings. So that's a pretty significant drop. And obviously, we're only 3 months away from closing off the year. And on the forward PE of next year's numbers, 16 times earnings, which is pretty cheap, because I would say that this should be trading at about the market average of about 20 times earnings. But I could argue the case that this should be 25 times earnings, which is obviously really nice upside. So we'll have a quick look at the numbers just to see the potential upside in SharkNinja. So I put 5, 8 and 10% revenue growth in, which is obviously far below what they're currently forecasting at the moment. So a bit of a slowdown forecasting there. 10, 11, 12% profit margins. You can see already they're doing 10% profit margins and they're expanding gross margins at a very good rate. So I'd expect them to probably get to those sort of levels. I put 20 times earnings in. I know it says 30 there, so let me just change that to 20 for you guys. And on the low side, yeah, you make it 18%, not amazing, but that would be a bit of a decrease in the profit margin. The growth way below where it is at the moment. Mid side, we got about 44% and we got 70% on the high side. Now, I think that potentially they could do a bit of a share buyback. Maybe I factor that in. Let's say they buy about 10% of the market cap with the levels of profitability that they do have. Let's say that all of a sudden the market says, you know what, I actually think you should be 25 times earnings. You get to 130% upside. Let's say they are able to maintain like a 12% revenue growth. Let's say they expand those profit margins a little bit more to 14 times earnings. You're now up to 166% upside. Let's say the market gets really ridiculous and puts it to like a 30 times earnings. You're getting over 200% upside there. So, best case scenario, you're getting really nice upside. But even not assuming crazy numbers here, the upside's fairly decent, to be fair. So yeah, I'm buying here at the moment, and I think that this could do quite well at the moment. I have bought like a bit of a start position in here. Ideally, if SharkNinja can drop maybe like another $10, $20, especially if it gets into that $70 range, that'd be really nice if that does happen. So I'll be watching the numbers and see if that happens. But yeah, I have been buying SharkNinja at the moment, and bought a start position in that last week. Anyway, so thanks for watching anyway, guys. Hope you enjoyed it, and I'll see you on tomorrow's video, where I feel like we're probably going to be reviewing like Google's earnings, Mercado Libre's earnings. Is it Amazon that's reporting tonight? Microsoft are reporting tonight. Yeah, it's a busy one tonight. So hope the video was useful as always, and I'll see you in a bit.